Commodities wrap the week with powerful and often conflicting signals. From energy to metals to agriculture, the charts are setting up for moves that could define the months ahead. And some markets are already on the edge of big swings. In our weekly digest today, we start with oil. As we can see on the candle closure on Friday, oil is predominantly bearish and it already formed 7 red candles in a row for the daily frame. 2-day frame is also strongly bearish after forming a tower top, and the weekly one closed below the very important levels, but technically forming a falling 3 methods. If nothing changes in the momentum till the end of the month is likely to close with the bearish engulfing candle, and it will be a very strong signal for continued weakness. This is the chart that we've been tracking for a while for oil on a short mid-term perspective. This is the one that we shared on July 29th, and after that, after hitting this target, oil has been declining. So we have nothing to complain about, and now we have a strong close above this this level, and we are opening a path towards the purple wave C, potentially wave C. However, there is also a chance for wave 3 to be formed, which would be slightly longer. And this is the perspective for the short term. Oil declined over 9% since our call, and right now I think that there is a good chance that oil is forming wave 3. So if we now, that's all for oil, and if you're interested in the bigger perspective, tune in for our website. We posted the recent weekly update with more charts. Now let's talk about big companies: ExxonMobil, Chevron Corporation, and ConocoPhillips. So what candles are telling us here? It's quite interesting. On the 10-day frame, Exxon closed with a strong bearish reversal confirmation. So this means that we would be looking for lower prices for Exxon in the nearest future. The Chevron Corporation is quite different. That's an interesting position here, and we have 4 candles here. Technically, this is a bullish flag, and I would be expecting a move higher. Perhaps it might take another few weeks for consolidation, but my expectation that we might see higher prices for Chevron. And a fairly similar situation for Conoco. We had a huge bullish candle here on the weekly frame at the beginning of June, and since then Conoco wasn't able to establish the momentum. Now we need to see if it breaks above this green line, it will be a bullish momentum. If it breaks below the red line, it will be a bearish one. Until then, we are neutral, waiting for a strong directional move. So that's all for oil, and now let's quickly talk about natural gas. So natural gas worked perfectly and did what we expected it to do. After forming a bearish continuation candle on the weekly frame, it made another one, and now we are looking for lower prices. Potentially, it 3 weeks ago it broke through the 50 weeks moving average. Now it is approaching the 100 weeks moving average, which would extend bearish odds. On the daily frame, we have a fresh 50 over 200 days moving average bearish, or some call it death cross, and at this point I'm looking for a continued move lower. The recently formed 15-day frame formed a bearish candle, bearish continuation, and we are looking for lower prices. If we look at a short-term perspective, potentially natural gas is forming an impulsive wave down, which could be a BC correction for wave 2. However, there are other options on the table at this moment, and just a few days ago, I posted a long-term forecast for natural gas, which includes midterm and long-term perspectives with explanations of what is possibility and what are the most probable targets at the moment. So you're welcome to visit our website and check the long-term forecast there. So for short-term, this is the perspective. Now let's have a look at uranium. And first we will talk about URA, Global Uranium ETF. What we are seeing here is generally, I would say that while there is still no confirmation, it looks like the bearish odds are building, and right now the daily is neutral bearish, and we have a dark cloud cover on the 3-day frame. The weekly had a chance, by the way, to reverse this bearish candle, strong bearish candle, but it lost in the last day. So in general, the weekly is bearish neutral. If we look at the longer term chart, something that we have been tracking since the beginning of May, and by the way, URA added over 50% from the moment of the call. I think there is now it is possibility of forming a corrective wave 2. Well, how long would it take? It's not very clear at this moment. It could be fairly short one. So far, the working hypothesis is we are entering a corrective wave 2. And if we look at the shorter frame, this is for our chart, there is a possibility of an ABC formation with the most typical targets between 28 and 33. So that's the primary path right now. However, there is also a possibility of an immediate move higher. However, I am looking at it with lower probability. And now let's have a look at Conoco energy fuels. We have a very interesting closure on Friday. So at the beginning of Friday, I was thinking, well, this is going to be another super rally. However, bulls lost the momentum and the candle formed a gravestone doji or a bearish hammer. The same thing happened with the 3-day frame, and if we look at the weekly frame, energy fuels had a chance to negate this bearish engulfing. However, it didn't, and now the odds on the weekly frame are bearish, and the 10-day frame is also bearish because of strong move above the Bollinger Bands. Now let's have a look at the chart. So this is an amazing call that we made on April 9th when the stock was 3.7 something, and since then it rallied 184% to 1074. So, and our target on that day, on April 9th, we said that this is going to be a rally towards $9 and only 138%. So definitely energy fuels overdid, and now we are looking for possible correction. So this is the latest chart, and there's a possibility that energy fuels completed wave 1 here. So after this wave 1, once we have a confirmation on the weekly frame and everything, we would be looking for a pullback towards wave 2. Well, that's the perspective. So now we are looking for confirmation, and also we had posted a long-term chart which is available to only our subscribers on the website. It has the long-term perspective for energy fuels. Well, that's all for the energy sector. Now let's have a look at the metals, and we start with gold. There is an interesting condition, technical condition. Gold is technically bullish on the daily frame, and we are seeing a healthy trend here, and this candle is nowhere near being bearish until we see a strong reversal confirmation. However, this is a short-term frame. However, if you look at the midterm frame, for example, the weekly frame or the 10-day frame, we are seeing that gold is under the spell of big bearish candles. So this is the weekly confirmation of a top, and it hasn't been negated for 6 weeks already. And this is the 10-day frame. We had at the end of April, we had a bearish, strong bearish engulfing here, and now we have 6-7 candles which were failing to negate this candle. Now I would be looking for the next closure on August 21st, and if gold closes above this level, 3438.133, then it would be bullish, strong bullish, and most likely I would be looking for another phase, another big leg upward. However, a failure would mostly completes this formation and sets the move lower. If we look at the Elliott waves, this is the chart that we've been tracking for a while, and there are still two main possibilities on the table. First is wave 5, potentially wave 5 after completing a triangle. That's what I'm tracking. And also there is a chance for the red path. At this point, it's not entirely clear which one will take precedence. Short term points upward, but midterm points downward. So this wave, the red path, is very close to being invalidated once it moves above the top of wave 2 here. Well, the sign 1 is still on track. So let's see how it closes. I'm somewhat neutral on gold. Now let's talk about silver. So silver is slightly different from gold, and if we look at the candles, the candles are looking very bullish. We have a strong reversal on the daily with 3 white soldiers, a healthy trend, and the only thing that this Friday's candle could be a bearish one if it forms. This is an inside candle, and if there is a strong confirmation of a reversal on Monday, Tuesday, well, that could be a change of direction. So far, the weekly is an inside up bullish one, and the 8-day frame is shaping as a bullish continuation candle. Now, if we look at the Elliott waves, this is the most recent wave, and there is no quite clear distinction between bullish and bearish. So this wave could be an impulse as wave 1, and if we look for higher prices, we might see another few days of corrective action before wave 3 starts, or there is also a possibility that either blue or red count are in place right now, and as long as silver stays below this top, so this red and blue counts are going to be on the table. And now let's have a look at SLV Trust. That's a also an interesting one. Technically, everything is bullish on the daily frame, and the weekly frame is also bullish. However, I'd like to emphasize this monthly closure here. We had a huge upper shadow, and if this candle, the August candle, remains within this upper shadow and closes like this, it would be a bearish formation. Let's see how it closes. So far, there are still 20 days, and silver still can recover from this condition. I mean, not silver, SLV, Silver Trust. Now let's talk about the miners. So GDX. It's also an interesting position here. I would say that the weekly is bullish, right? So, and the 10-day frame also closed with a bullish candle. The only concern that some indicators that I'm tracking, they are strongly started to point down. So this could be the final candle of the sequence. Let's see what happens next. But the daily closure with two candles entirely above Bollinger Bands, this is a separate concern. So this could be a reversal pattern as well, depending on how Monday and Tuesday closes. So I would say I'm slightly bullish on silver. However, there are big concerns from the technical perspective. If we look at the Elliott waves for the last wave that started in October 2022, there are two possibilities on the table. First of all, it's wave potential. It's a potential ending diagonal as wave 1, 2, 3, 4, and 5. However, at this point, I'm also looking for wave 4 here. So, and this wave that started in December 2024 is very strange. It's not entirely an impulsive wave, and I would be treating it as an expanding ending diagonal. Perhaps it's already completed, but there is no confirmation of reversal yet. So at this point, I'm looking for both the green and the blue counts, and depending on what would be the next move. And as I said, the technicals are indeed concerning, but we need to see a stronger confirmation and stronger move on the candles and few other indicators. So these are the juniors. So they're pretty much the same formation here, 1, 2, 3, 4, 5. So maybe juniors are even more defining from the perspective of shape and counts. So there are quite a few overlaps here, and I'm looking for the perspective of an ending diagonal here as well. So if this hypothesis works indeed, then we might see a very strong pullback down towards 41 or even 25, depending on what kind of structure it will be. Well, that's they are aligned with the GDX, but again, we need to see a very strong confirmation. Now let's have a look at the softs, and we will start with coffee. So coffee is bullish at this point. So I'd like to say that this week was quite a special one. We had a bullish confirmation on the daily frame and the reversal and the confirmation, and on the weekly frame we had a very strong inside up candle which moved above the 8 weeks moving average, which is significant event, and if we see a confirmation, it will be it will likely be a reversal. And this is an 8-day frame, which is closing in just a couple of days. On Tuesday, there is a very good chance to form a bottom here, just maybe slightly higher. And this is the chart, and this is the original one that we discussed back in June. I think that this is the 5-day chart, and what we are looking here is the bullish engulfing, and we have 3 dojis, which could be rising 3 methods, and now we have a strong bullish candle which closes on Tuesday. If coffee indeed pushes the price higher, I would say this is a bottom, and we might be looking for a super rally starting from here. Well, that's all for coffee. The next week is crucial for confirming a reversal on the weekly. Now let's talk about corn. So what we are having here is a bearish continuation candle on the weekly frame. However, I would like to say that we had a strong bullish engulfing on the daily frame, and even though it wasn't immediately extended, the 2-day frame, it's potentially showing that we are getting close to a bottom. So while there is no strong confirmation yet, I would like to say that we are probably approaching a bottom. So the 15-day frame so far is bearish, but again, we might be looking for a signal to reverse. And on the Elliott wave frames, no changes here. We're still looking for a lower low to complete this formation, either below the green line or below the blue line. I would prefer to move the current wave to move below the blue line, which would make further forecasting much easier. Well, but the market is never easy. And now the final one, I'd like to talk a few words about wheat. Wheat is possibly forming a bottom. This is the tower bottom formation on the daily frame. 2-day frame, we had a bullish engulfing. The weekly candle, it could be neutral, could be bearish, depending on the next weekly closure. But beware, there is a risk of forming a bottom. If we look at the Elliott waves, the shorter or midterm frame, so technically wheat made another lower low here, and this diagonal could be complete. Well, let's see if there is any other moves, but I'd like to say there is a very high possibility that this frame here is complete. This wave is complete, and we would be looking for a very strong move. And speaking about long-term chart, something that we've been tracking since August 2022, there is a possibility that right now there is a possibility of a bottom any moment. Right now, this wheat is in the target area, and we might be looking for a reversal here. Well, and if we that's all for wheat at this moment. And now I would like to talk a few words about our swing room. Our swing room was long on SPY as of August 5th and managed with precise entries, exits, and risk control. Over the trailing 12 months, the room delivered about 40% unleveraged versus the S&P 500 19s. That's the power of disciplined, data-driven trading. And now let's wrap it up. Oil is starting to roll over, gathering bearish momentum with the risk of bearish monthly closure. Natural gas, after clinging to pivotal support, has now opened a clear path to lower prices, aligning with our long-term forecast for earlier this week. Uranium, after the super rally we called in April, looks ready for a well-earned pause, while gold and silver may still push higher, but carry a shadow of mid-term bearish momentum that could sour the rally quickly. Miners are hinting at change. GDX may have completed the final wave of its diagonal. In the agricultural corner, coffee has kicked off a strong bullish reversal from the bottom. Corn keeps pressing lower, but is inching closer to a floor. And wheat could soon flash a major bullish weekly signal worth watching closely. For the price of a cup of coffee, you can join our YouTube members for exclusive weekly videos. Website subscribers get full written reports and deep dive analytics you won't find anywhere else. We chart the charts before the crowd even blinks. This is Investing Angles.